Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, January 4th, 5:06 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend. Since the follow-through days on November 1st and 2nd, this uptrend's getting weaker. You can see over here on the trend gauge, yesterday we downgraded leadership from bullish to neutral. Today, break of the 21-day moving average on the S&P 500 joins the NASDAQ 100 below the 21 with its second close, and a failure on intraday failure on mid caps and small caps to get back above their 21-day moving average. So a downgrade to neutral there also. We'll see how we close the week, but this market state is weakening from uptrend. As far as the intermediate and long-term trends go, all five of the major indexes still above the 50-day and 200-day moving average. So what happened today opened slightly negative. Good jobs data, ironically, before the open sent the futures a bit lower. But then we rallied right out of the gate up until maybe for about 2 hours, and then topped, reversed, had a three waves down, ended up closing near the lows of the day, and basically right across the board of the indexes, with the exception of the Dow and the RG8 barely being positive. But definitely a disappointment if you're a bull, particularly because after the recent selling that started the last day of the year, accelerated Tuesday and Wednesday of this week, 3 days down, arguably 4 days down. Time for a bounce. We got the bounce, but then the bounce failed. That's an expectation breaker, and it's negative for the market. Here are the final numbers. The big seven, led to the downside by Amazon and Apple and Google, down in 0.69%. RG8, our 8 growth ETF composite, just barely positive after getting really spanked the last couple of days. S&P 500 opened down 0.15%, was up as much as 0.5%, reversed hard, down 0.34%, equal weight down 0.17, NASDAQ 100 down 0.51, equal weight down 0.4, Dow just barely positive, mid caps and small caps green most of the day, slowly gave it up and closed near the lows of the day also. Mid caps down 0.2, Russell down 0.1, Global 60/40 bonds yield spiked today. That hit bonds, Global 60/40 down 0.30%, in-house GROTECTION down 0.34%. We'll talk about our portfolio changes in a moment. Let's get right into the indexes, and you can see here, we'll bring up the 5-minute, and you can see very clearly the open strong right out of the gate, topped 1130, and then one wave down, two waves down, three waves down, particularly with a harsh break into the close. Not what you want to see. You go to the daily chart, you can see just barely a close, 0.1%, honestly a rounding error, below the 21-day moving average. Now we need to get right back above it, but I said that about getting right back above it yesterday on the NASDAQ 100, and we didn't. We had a brief morning rally along with the S&P. We took off our techs hedge as Apple came off the lows and Microsoft was positive. We booked the gains on that, but we reversed here just the same. Not quite as harsh as the S&P, but three waves down nonetheless. Not good. Negative reversal, two closes below the 21, and the 21 is rolling over. We won't get long the NASDAQ 100 unless we now bounce off of the 50-day moving average or reclaim the 21-day moving average. In fact, we put a QID, a inverse NASDAQ 100 on when we broke that low into the close. Let's go to the Dow, which continues to hold up. Not a surprise. It's a defensive index, but a reversal also, second close below the 8-day moving average. Mid caps and small caps made an effort to get above their 21, but failed. You can see it's rolled over now, got back above it, or barely above it, but closed near the lows of the day. That's mid caps, small caps, got back above it, reversed lower low. Short term, obvious pressure on the market. Let's get to the VIX. VIX up slightly, 3 days more positive now. Not a surprise. That's what the market's done. Ran into the declining 50-day moving average. It's above the uptrending now 21-day moving average. So which one of those is going to win will probably dictate what the next move in the market is as they move opposite to each other. The dollar was basically flat today. I'm not even going to show that chart. GLD and gold stocks basically flat. Not going to show those either. Let's go to bonds. They were down on the day, but sitting right on after a big positive reversal yesterday, uh, down today, tight range, sitting right on the 21-day moving average. That's the broad bond index, the TLT, sitting right on the 21 and the 200, giving up everything that was earned off of that bounce yesterday also, meaning yields rose into the declining 21, up 2% on the long bond, and the 10-year up 2.15%. Let's get to the tail of the tape. And you can pause this. I'll hit the highlights. ADP data above expectations, but that caused the futures to pull back. So good news is still bad news because the market is expecting rate cuts by the Fed. But if the economy stays too strong and inflation doesn't stay in check, we won't get those rate cuts. Big jobs report, the government jobs report Friday before the open. We'll see how we respond to that. Down 3 days is the day count, 3 closes below the 8 EMA, and the 42-day consecutive streak on the S&P above the 21-day moving average ended today. First close below that. Sectors: regional banks, biotech, Bitcoin, uranium, and medical stocks strong. Oil's strong out of the gate, had a big negative reversal and ended up harshly down. Dollar basically flat. Semiconductors, tech, and solar lagged. So in-house, I said we did some offensive selling on techs, took our gains on that with the bounce. With the breakdown late in the day, offset that with kind of replacing it with QID. Bounce and the strength off of the 21, great low risk entry to SSO. We did that early in the morning. We'll reassess that tomorrow if we don't reclaim the 21. Stopped out on ESTC and TNA, which is the small cap long, as we failed into the now declining 21-day moving average. Bottom line on the day, morning rally reverses to an afternoon drop. S&P 500 below the 21-day moving average. We'll take a look at a couple of charts here. It's my anniversary. I'm gonna bust out of here. This will be a short video. The lovely wife and I, 27 years, are going to dinner. Here's ESTC, no strength at all. 21-day has rolled over. We talked about the QQQ. How about what acted well today? Well, Lilly has been strong, gapped up, negative reversal along with the market. So this is typical in a weak market. When you try to break out, you will fail. It tried to break out and it failed. No surprise now, really not buying strength, clearly not buying breakouts. You really have to have the wind at your back if you're buying breakouts. You got into Lilly down here or around the 600 level or just above as we did, you're still positive. If you bought the breakout from the flat base, you're not, because that's what happens in markets. They will seek to confuse the masses. What else is acting well? Kava, Mediterranean restaurant, reclaiming the 21-day moving average. CrowdStrike, one of our favorite names, really looking to add to this as it holds up, but not in this market. Bounced, closed right on the 21-day moving average. NVO, the other weight loss drug, big breakout today, but reversed off of the high. Keep an eye on this. Lilly reversed. We need to see with the volume on this, as they did get good news. Want to see if this breakout holds. As I said, breakouts are failure prone in this type of market. Celsius trying to regain leadership. Up 2 days ago, down yesterday, back up today, but gave back most of the gains, but still holding the 8-day exponential moving average. That's going to wrap it. As always, one more, Abercrombie and Fitch. Strong out of the gate, back above the 8 EMA, gave up half the gains as it reversed. As always, like to hear from you. The email's don@revereasset.com. My partner, Dan Stewart, if you're interested in becoming a client, dan@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. It's not how much you make in the markets. It's how much of that you can keep. Will we be transitioning from growth mode to protection mode. Well, we've done a little bit of that this week. We'll continue to do more of it. We really like to be heavily involved in the market as long as we're above the uptrending 21-day moving average. Numerous studies cite that's the best time to be in. But breaking and rolling over, best to reduce. That's what we've been doing. With that, I'll wrap up the video for Thursday, January 4th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.